How many shares do you need to retire on Google stock by 2030? That is exactly what I'll be answering in today's video. I'll be going over my bear case, base case, and bull case to figure out exactly where Google stock could be in 2030 and therefore how many shares you'll need to retire. So if you do enjoy, make sure to hit the like button for all the work that went into this video, and if you haven't already, please consider subscribing for more content. Also, if you're looking to learn more about stock market investing and figure out how to analyze companies, you can join my Discord community of investors down below for only $1 in your first month. Alright, now before we can calculate how many Google shares you'll need to retire, we first need to know how much money you'll need invested to retire by 2030. As a 26-year-old investor, I am a huge fan of the very well-known FIRE movement, also known as Financial Independence Retire Early. In order to achieve FIRE, one needs to be frugal while saving up and investing as much money as possible while they're young, and this paves the fastest way to retirement for most people. However, retirement has a different meaning for everyone. Some might only want to be able to cover their living expenses to retire early, aka lean FIRE, while others want to be able to enjoy a life of abundance, aka fat FIRE. So for the purpose of this video, let's assume you want to live a fat FIRE retirement, meaning you'll have extra money left over after paying for your living expenses every month. Now, the average household living expenses in the US are about $5,100 per month, but because of inflation, your expenses will likely be a lot higher in 2030. So assuming an inflation rate of 3% per year, this would bring our average living expenses to about $6,500 per month in 2030. But of course, we want to have spending money on top of paying our monthly living expenses every month, so let's assume we want to withdraw $10,000 per month or $120,000 per year from our investments in 2030 and beyond. Using this retirement calculator online, we can see that $10,000 per month would last us over 40 years if we were to have $1.5 million invested that was continually growing at 8% per year, which is about what the S&P 500 has returned after inflation on average. Alright, now moving on to my Google stock valuation model, what I've done is I've estimated Google's earnings per share, or EPS, all the way to 2029 since we want to retire in 2030. Here you can see the EPS growth rates are color coordinated with the adjusted EPS values below that they correspond to for each year. For 2022 and 2023, I directly took analyst EPS estimates found on Yahoo Finance under the Analysis tab. Analysts only expect 3% EPS growth to $116 in 2022, while they expect a much bigger jump of 17.4% in 2023. Finally, analysts expect EPS growth to continue over the next 5 years at 14.1% per year. However, for 2024 and beyond, I made this EPS growth rate a variable that I can control for the bear case, base case, and bull case to highlight the different growth scenarios for Google stock. And since we know stock prices follow EPS over the long run, we'll be able to calculate Google's stock price by applying a future PE ratio. But first, what exactly is a reasonable EPS growth rate for Google into the future? Well, since 2010, I found that Google grew its net income from $8.5 billion to $76 billion last year, while its split adjusted EPS grew from $13.16 to $112.20 over the same 11-year period. This came to total EPS growth of 753% or 21.5% per year since 2010. So realistically, Google will probably grow slower than this into the future since they are already past a $1 trillion market cap, and that's what analysts believe too. Getting straight into it, we know our net worth target for 2030 is $1.5 million. The stock price for Google right now is $2,730, and then Google's price to earnings ratio is 24.3. Now, starting with the bear case, I've assumed that Google will grow its EPS from 2024 onwards at a rate of 10% per year, which is below the analyst consensus estimate of 14.1%. I also assumed Google will have a trailing PE ratio of 17.5 at the beginning of 2030. Now, before we go any further, you'll need to know that Google just announced a stock split of 20-1 that is going to take place on July 1st. So without considering the split, Google stock would be worth $4,218 per share in 2030, which I've calculated by multiplying the 2029 EPS by the 2030 trailing PE ratio. And post-split, Google stock would be worth $210 per share. Now, assuming the bear case is accurate, you would need 356 shares of Google pre-split or 7,112 shares of Google post-split to be able to retire by 2030. To buy all those shares today, it would cost you $970,000 US, which would eventually grow into that $1.5 million at a compounded annual growth rate of 5.6%. As we can see, this scenario is quite bearish on Google, and you'd actually be better off putting your money into an S&P 500 index fund to get a higher annual return. I personally think this scenario is unlikely, and I'd only give it a probability of about 10 to 20% of occurring. And that's because Google is an extremely innovative tech company that has continuously grown its earnings at rapid rates in the past. And the fact that they've been able to maintain a 90% plus market share in the online search market for over a decade now just goes to show that Google will be around for the long run. Now in the base case, I'm assuming an EPS growth rate of 15% from 2024 onwards, and a 2030 trailing PE ratio of 20, which is realistic since Google does currently have a trailing PE of 24.3. This would make Google shares worth $6,300 pre-split in 2030, or post-split they would be worth $315. Now assuming the base case is accurate, you would need 238 shares of Google pre-split or 4,766 shares of Google post-split to retire by 2030. And to buy all of those shares today, it would cost you 650,000 US dollars, which would eventually grow into that $1.5 million at a compounded annual growth rate of 11%. I personally think this is the most realistic scenario since I've made Google's future EPS growth rate and their future PE ratio slightly below where it's trading today. And although Google's growth re-accelerated in 2021 to an insane level, this was primarily because they benefited from COVID, and I would not expect this type of growth to continue for many years to come. But who knows, Google could surprise us all, and they have in the past, so let's now take a look at the bull case. In the bull case, I'm assuming an EPS growth rate of 20% per year from 2024 onwards, which is about as fast as Google's been growing their EPS over the past 11 years. Then I'm assuming a 2030 trailing PE of 25, which is slightly above where Google is trading today at 24.3, so this is honestly quite a bullish scenario in my opinion. In 2030, Google stock would be worth about $1,150 per share pre-split, or post-split it would be worth about $500 per share. Now if the bull case were to come true, you'd only need 148 shares of Google pre-split or 2,953 Google shares post-split to be able to retire by 2030. To buy all those shares today, it would cost you about 400,000 US dollars, which would eventually grow into that $1.5 million at a compounded annual growth rate of 17.9%. Now I believe this scenario would only be possible if Google Cloud were to start adding a lot of revenue and profitability on top of their existing ad business, or if they were to come out with some new innovations that were to spike up the business profitability. Otherwise, I feel that it's unlikely Google will continue growing their EPS at 20% per year like they have in the past 10 years, just because of the law of large numbers. Anyways, I think that Google stock is one of the safest bets you can make in the entire stock market right now, just because of their fortress balance sheet having over $100 billion in cash. And the fact that they've been able to maintain a 90% plus market share in the online search market for over a decade now just goes to show that Google will be around for the long run. And for these reasons, I definitely think that Google is a stock that someone could retire on. But please don't go out and put all of your money into Google stock right now. Diversification is still very important as you approach retirement. But anyways, let me know in the comments below if you did enjoy this type of video, and if you want me to analyze any other types of stocks like Tesla or Meta or other stocks with really strong moats that you could eventually retire off of. So make sure to hit the like button and subscribe if you have not already. And with that said, I will see you guys in the next one.